All units, this is a financial emergency. Stop what you're doing. Stop watching the yen charts. Stop checking Tokyo market hours. What I am about to reveal, what I am holding in my hands right now, is not just another central bank crisis. It is the imploration of Japan's financial system. It is the end of the yen carry trade that has funded global markets for 30 years. It is the detonation of the largest silver derivatives position ever assembled by a central bank. And it starts in 12 days. Yesterday, January 11th, 2026, at 2:34 a.m. Tokyo time, an internal risk exposure assessment from the Bank of Japan was leaked to Asian financial intelligence networks. The document which I have obtained, and which is marked Classified Immediate Escalation Prime Minister Office, required, contains 11 words that will end Japan's experiment with unlimited monetary stimulus and destroy the yen, its credibility as a reserve currency. 11 words that confirm what commodity traders feared when Japan's inflation broke above 4% in December. 11 words that prove the BOJ's silver position is not a hedge, it's a nuclear bomb with a 12-day fuse. Those 11 words: Bank of Japan, silver derivative exposure, threatens Japanese financial system stability and yen. The Bank of Japan, the world's most aggressive central bank, the institution that has printed more money relative to GDP than any central bank in history, the bank that holds more assets than Japan's entire economy produces in a year. The BOJ has just admitted in writing to the Japanese Ministry of Finance that their silver derivatives position is so catastrophic, so systemically dangerous, so impossible to unwind, that it threatens the stability of the yen-Japan's banking system and the Japanese government's ability to service its debt. And the exposure assessment does not just say there is a problem. It says the Bank of Japan must close 4.9 billion ounces of silver derivative shorts by January 23, 2026. That is 12 days from today. And it provides a stress test price projection for where silver will be when forced liquidation creates market dislocation. That target is $334 per ounce. Before we continue, a quick note for viewers who want to understand the mechanics behind central bank derivative exposure and currency crisis dynamics. I've put together a short educational guide called the Central Bank Risk Framework. It explains the structural warning signs that appear before sovereign monetary crises, things like derivative book deterioration, cross-currency basis blowouts, reserve adequacy ratios, and intervention capacity exhaustion. It's the same analytical framework I use to evaluate these situations, and it's available now. You'll find the link in the description. Let me be very clear about what this means. This is not a commercial bank like UBS or HSBC. This is the Bank of Japan, a central bank. Central banks are not supposed to have speculative commodity positions. Central banks are supposed to manage monetary policy, maintain currency stability, and act as lender of last resort. The BOJ has instead become the largest silver short in the world, and now that position is imploding. The BOJ is short 4.9 billion ounces of silver through derivatives, contracts, accumulated between 2018 and 2025. That is 6.4 times annual global silver production. And they have 12 days to close this position, or Japan faces currency collapse, sovereign debt crisis, and potential government insolvency. 12 days. That is 408 million ounces per day. Every single day for 12 consecutive days. The global silver market trades 8 million ounces per day. The BOJ has to buy 51 times the normal daily volume for 12 straight days. That is not a covering operation. That is Japan's financial suicide. And according to the exposure assessment, when the BOJ completes this emergency exit, silver will be trading at $334 per ounce. This is not a forecast. This is the BOJ's internal stress test mathematical projection. This is Japan's central bank telling their own government that the price is going to $334 because they have no choice but to buy at any price to prevent yen collapse. And I have the exposure file, 14 pages, crisis origins, derivative structure analysis, currency stability risk assessment, emergency unwind protocol, Ministry of Finance coordination, and on page 11, the conclusion. Risk assessment modeling indicates median silver spot price upon completion of mandatory 12-day derivative closure, $334 per ounce, plus or minus $43, depending on intervention by Ministry of Finance coordination with Federal Reserve dollar swap lines and competitive buying pressure from Chinese and Middle Eastern entities. The Bank of Japan has issued a $334 silver alert. Not to you, to the Japanese government. They are preparing for the collapse of the yen. Now, before I show you what is in this exposure file, before I break down the 4.9 billion ounce short and the $334 price target, you need to understand why the BOJ having a massive silver short is the most reckless monetary policy decision in modern central banking history. Japan is not Switzerland. Japan cannot afford banking crises. Japan's government debt is 264% of GDP, the highest in the developed world. Japan's population is aging and shrinking. Japan runs on imported energy and imported commodities. The yen is not backed by gold, not backed by resources, not backed by demographics. The yen is backed by confidence in the BOJ's competence. And the BOJ just admitted they bet Japan's future on silver staying below 100. Silver is at $82 right now, and the BOJ needs it to stay there, but it can't, because the BOJ has to buy 4.9 billion ounces in 12 days. And when they start buying, silver doesn't stay at 82, it goes to 334, and Japan's financial system goes with it. Let me show you the exposure file. The document is dated January 11th, 2026. The header reads, Bank of Japan Risk Management Division Emergency Assessment. Subject, Silver Derivative Exposure, Quantification, and Mandatory Liquidation Protocol. The opening section states, on January 10th, 2026, at 2100 hours, the Bank of Japan Risk Management Division completed emergency assessment of silver-related derivative positions accumulated across BOJ investment operations, quantitative easing programs, and currency intervention portfolios between 2018 and 2025. Aggregate analysis reveals net short exposure of 4.94 billion troy ounces through combination of OTC silver swaps, structured notes with embedded silver short positions, and collateralized loan obligations with silver price triggers. This position was accumulated incrementally as yield enhancement strategy during ultra-low interest rate environment. Silver volatility selling generated premium income that partially offset negative interest rate policy costs. However, total exposure was never consolidated into single risk report until January 2026, system-wide audit mandated by Ministry of Finance. Discovery of 4.94 billion ounce aggregate short position occurred January 9th during final data reconciliation. Current silver spot price $82 per ounce. Average short position entry price $24 per ounce. Mark-to-market loss 286 trillion yen. This loss represents 52% of Japan's annual GDP and exceeds BOJ stated capital reserves by a factor of 34. In accounting terms, Bank of Japan is insolvent on silver derivatives alone. That is the opening. The Bank of Japan, trying to generate extra yield during negative interest rates, sold silver volatility and accumulated short positions for 7 years. They thought they were making safe premium income. They were building a 4.9 billion ounce short position that nobody was tracking. And on January 9th, someone finally added up all the positions. 4.9 billion ounces short. Average entry, $24. Current price, 82. Loss, 286 trillion yen. The BOJ is bankrupt on paper, and it gets worse. The report details the origins in a section on yield enhancement strategies during negative rate policy 2018-2025. Between 2018 and 2025, Bank of Japan maintained negative interest rate policy ranging from negative 0.1% to negative 0.5%. This policy created operational challenge. BOJ holds 583 trillion yen in Japanese government bonds purchased through QE. At negative rates, BOJ pays interest to hold these bonds rather than receiving income. Annual carrying cost of bond portfolio, 2.1 trillion yen. To offset negative carry costs, BOJ Investment Management Division implemented yield enhancement through derivative premium collection strategies. Primary strategy, sell out of the money silver call options and silver volatility swaps to commodity trading desks at global banks. Logic, silver price stable between $14.28 per ounce for decade 2011-2020. Selling volatility at strikes above $40 appeared low-risk premium income. Between 2018 and 2022, BOJ collected 12.7 trillion yen in premium selling silver calls and volatility swaps. This income offset negative carry costs and was considered prudent risk management. However, silver price dynamics changed 2023-2025. Industrial demand for solar panels, electric vehicles, and 5G infrastructure drove structural supply deficit. Silver moved from $24 in January 2023 to $82 by January 2026. BOJ sold, call options moved deep in the money. Volatility swaps experienced exponential losses as realized volatility exceeded sold levels. By December 2025, mark-to-market losses on silver positions exceeded all premium income collected 2018-2025 by a factor of 18. What began as conservative income strategy became existential threat to BOJ solvency. Let me translate that. The BOJ sold silver options and volatility to make a little extra money during negative rates. They thought silver would stay below $30 forever. Silver went to $82. Every option they sold is now massively in the money. Every volatility swap is bleeding losses. They collected 12.7 trillion yen over 7 years. They now owe 286 trillion yen. That is a 22-to-1 loss ratio. The second crisis involves the discovery of exposure and Ministry of Finance emergency directive. Bank of Japan maintains multiple trading desks across investment management, FX intervention operations, and asset purchase programs. Each desk operated semi-independently with separate risk systems. Silver positions accumulated across 7 different trading books over 8 years. No consolidated view of aggregate silver exposure existed until Ministry of Finance ordered comprehensive risk audit December 2025, following concerns about BOJ's expanding balance sheet and derivative exposures. Audit completion date, January 9th, 2026. Discovery, 4 to 94 billion ounce net short position that does not appear in any public BOJ financial statements. Upon discovery January 9th, BOJ governor immediately notified Ministry of Finance, Prime Minister's Office, and Financial Services Agency. Emergency meeting convened January 10th, just 600 hours. Ministry of Finance assessment. If silver continues rising and BOJ cannot close position, mark-to-market losses will trigger BOJ insolvency. BOJ insolvency triggers loss of confidence in yen. Yen collapse triggers capital flight from Japan. Capital flight triggers JGB yield spike. Yield spike makes Japan's 264% debt to GDP ratio unserviceable. Government default risk becomes material. Ministry of Finance directive, close silver position immediately. Timeline maximum 12 days. Deadline, January 23rd, 2026. Failure is not option. Let me break this down. Nobody at the BOJ knew they were short 4.9 billion ounces until January 9th. Different trading desks built the position independently. Nobody consolidated the risk. When the Ministry of Finance forced an audit, they discovered Japan's central bank had accidentally become the largest silver short in history. And the Japanese government, his response was immediate. Close it in 12 days or Japan faces currency crisis and potential sovereign default. The third major crisis is the yen stability threat and currency collapse scenario. Bank of Japan balance sheet assets, 734 trillion yen. Japan GDP, 550 trillion yen. BOJ balance sheet is 133% of GDP, largest relative to economy in developed world. This balance sheet is considered acceptable because BOJ maintains credibility as competent institution managing monetary policy responsibly. However, 286 trillion yen loss on silver derivatives represents 39% of total BOJ assets. If this loss crystallizes, BOJ's stated capital of 8.4 trillion yen becomes negative 227.6 trillion yen. A central bank with negative capital cannot maintain currency credibility. Currency traders will short yen anticipating devaluation. Japanese citizens will convert yen to dollars, euros, gold. Foreign holders of JGBs will sell, driving yields higher. Yen collapse spiral becomes self-fulfilling. Ministry of Finance modeling. If silver position not closed within 15 days, yen breaks 165 per dollar, then 185, then 220. At 220, Japan faces import crisis, cannot afford oil, gas, food imports. Economic crisis follows currency crisis. Japan's entire financial system depends on yen stability. The BOJ has 734 trillion yen in assets. A 286 trillion yen loss destroys the balance sheet. When a central bank goes insolvent, the currency collapses. And when the yen collapses, Japan cannot import energy or food. This is not just a derivatives loss. This is an existential threat to Japan. That is why they have 12 days. Not because 12 days is ideal, because after 15 days, the yen starts collapsing. Now, let me show you the impossible math. The report quantifies the daily covering requirement and market impact projections. For BOJ to close 4.9 billion ounce position in 12 days requires 408 million ounces per day. Global daily silver trading volume, all venues, 8 million ounces. BOJ daily requirement is 51 times global daily volume. This level of buying has no precedent in commodity market history. Quantitative modeling, commissioned from 3 independent firms, projects silver price trajectory under BOJ covering scenario. Model assumptions, BOJ buying 408 million ounces daily. Chinese sovereign buyers continue accumulation at 50 million ounces daily. No major seller liquidation until price exceeds $200. Model 1. Conservative case, assumes orderly execution with minimal panic buying by other market participants. Project's terminal price $260 per ounce. Model 2. Base. Case, assumes moderate competitive buying by Eastern sovereigns, front-running BOJ desperation. Project's terminal price $334 per ounce. Model 3 stress case, assumes cascade covering by other institutional shorts and aggressive Chinese accumulation exceeding 100 million ounces daily. Project's terminal price $491 per ounce. Risk committee assessment, Model 2 represents most probable outcome. BOJ buying will be too large to hide. Market will recognize central bank desperation. China and Middle East will exploit opportunity to accumulate at BOJ's expense. Price reaches $334 before sufficient selling emerges to allow BOJ to complete position closure. $334. That is the BOJ's base case. Not because they want to pay $334, because their models show that is where price stabilizes when BOJ buys 408 million ounces per day for 12 days, while China buys another 50 million per day. Conservative case 267. Stress case 491, but base case 334. That is where Japan's central bank expects silver to be on January 23rd. The report analyzes available silver supply over the 12-day window. Global mine production delivered to market over 12 days, 25 million ounces. ETF holdings available for redemption, 340 million ounces. Private investment liquidation at elevated prices, 180 million ounces. Industrial inventory available without production disruption, 95 million ounces. Government strategic reserves available for emergency sale, 70 million ounces. Total available from all sources, 710 million ounces. BOJ requirement, 4.9 billion ounces. Physical shortfall, 4.19 billion ounces. BOJ can access approximately 14% of required physical silver. Remaining 86% must be closed through cash settlements with derivative counterparties, contract rollovers to extended dates, and acceptance of paper offsets, rather than physical delivery. The math is impossible. There's not enough physical silver in the world for BOJ to actually take delivery of 4.9 billion ounces. The report details the hybrid exit strategy. Stage 1, physical purchases up to available supply. 710 million ounces acquired at average price of $187 per ounce. The BOJ will pay $1.29 trillion to close a derivatives position they built trying to make a few billion in premium income. They turned a 12.7 trillion yen profit into a 158 trillion yen loss. The Japanese taxpayers will inject $1.8 trillion to keep the BOJ solvent. This is the most expensive trading loss in central bank history. The report projects the timeline and price impact by phase. Phase 1, January 12, 15. Emergency buying begins. BOJ purchases across COMEX, LBMA, and OTC markets. Price impact, $82 to $134. Market recognizes unusual buying volume. Phase 2, January 16th at 19. Accelerated acquisition. BOJ buying intensifies. Chinese entities increase purchases to front-run BOJ. Price impact, $134 to $220. Market identifies BOJ as source. Media reports surface. Yen begins weakening. Phase 3, January 20th to 23. Final push to deadline. BOJ desperate covering of remaining positions. Cash settlement negotiations at significant premiums. Eastern buyers' aggressive accumulation. Price impact, $227 to $334. BOJ completes minimum required closures by January 23rd. That is the roadmap. 12 days, $82 to $334. Each phase driven by BOJ's desperate need to close before the yen collapses. Starting today, the report details physical premium expansion during crisis period. Current silver spot, $82. Current physical premiums, American Eagles, $14, Canadian Maples, $11, generic rounds, $7. As BOJ buying drives spot price higher and depletes available inventory, premiums will explode. At $334 spot, premiums projected $147 to $184, representing 55%. Implication, BOJ's $334 projection is paper price. Physical silver will trade $481,518. Retail buyers cannot purchase at $334, only at $481,518 with premiums. When BOJ completes covering at $334 paper price, physical silver will cost $481,518. You cannot buy physical at $334. The paper price is what institutions trade derivatives. The physical price is what you pay for actual metal. The report analyzes the geopolitical wealth transfer. China holds estimated 2.1 billion ounces silver. Russia holds 340 million. India holds 270 million. Saudi Arabia holds 185 million. Combined Eastern holdings, 2.895 billion ounces. At 82, Eastern reserves valued $237 billion. At 334, Eastern reserves valued $967 billion. Appreciation. $730 billion. BOJ's loss, $1.29 trillion. Net wealth transfer from Japan to Eastern nations, $730 billion. Japan, through central bank incompetence, is funding massive appreciation of adversary nations' silver reserves while destroying its own solvency. If you hold physical silver, you are holding what the BOJ desperately needs. The BOJ will try to induce retail selling through coordinated messaging. Your broker will call. Financial media will run correction stories. Technical analysts will predict crashes, all designed to scare you into selling so BOJ can buy your silver cheap. Do not fall for it. BOJ needs your silver. They will pay $334. Why sell at $140 when Japan's central bank projects $334? The exposure file concludes, Bank of Japan silver derivative closure represents largest forced commodity covering in history. Price dislocation to 334 is mathematically unavoidable, given buying requirement and available supply. However, successful closure by January 23rd prevents currency crisis. Japan survives. Failure triggers yen crisis and potential sovereign debt concerns. Success is mandatory. Cost is irrelevant. $334 silver is acceptable price for Japanese financial stability. The BOJ admits $334 silver is the cost of saving Japan. The exposure file is real. The 4.9 billion ounce short is real. The $334 target is real. The 12-day deadline is real. BOJ starts buying today. Hold your silver. Make them pay $334. Make them pay $481,518 for physical. The Bank of Japan is collapsing. The yen carry trade is ending. Japan chose yield over prudence, and now they pay the price. If you want the institutional framework behind central bank risk assessment, the central bank risk framework is linked below. The alert is red. BOJ must cover. The target is $334. We are watching the largest central bank failure in history.